What's going on September 10th, 2020, 13 market moves analysis. And I wish the market was that simple every freaking day. So just short 34.20. So yesterday we did get that positive 7 as the highest probability outcome was predicted. So short 34.20. Yesterday we've touched the 34.20 multiple times and we sold off promptly. At this point, this is going to be a very meaningful level of resistance, guys. So you see S&P futures at 34.20. What do? You buy like 3,400 strike puts. Okay, when it dips to like, 380, collect some gains. Okay, it's about a 40-point move. So the size of the moves after 3 major big days, okay, the size of the moves is going down. So you want to be careful with selecting your strikes. Now, going into the last part of the day, we could actually break out of this 30-40 move pattern, and we can actually stage a bigger move. But your goal is to calculate this 34.20 area. You see some volume coming in on the short side, maybe even add more once we break under the 3,400 level at some point. But basically, we've got some jobless claims numbers that were not good. And yet the market is stalling out, but at the same time, I mean, I can't imagine anybody wanting to buy the market in these kind of news. So 884 jobless claims, 1,000 that is, just shy of 1 million by 116,000 versus 850,000 expected. So no meaningful reaction so far, but it doesn't mean that the market is not going to sit on it for half a day, chew on it, and then all of a sudden it's going to spit out all of these stocks that are still selling at predominantly at the highest levels ever the world has ever seen them. So with that said, be very patient. Try not to get into any trades until about 1 o'clock, guys. That would be a better strategy opposed to jumping in at the open. So if S&P does not clear basically the level of 34.20 by 1:54 p.m. Expect a move 6. So expect a sharp sell-off between 2 and 4 p.m. going into the last part of the trading session. Oil chart looks highly interesting, and so is dollar chart, so we're going to take a closer look. BKNG puts on any bounce. It looks like BKNG at this point topped out, so this is the time we want to come in and buy some puts, especially going into Friday. This could be a sizable trade right here, getting into maybe 1850 strike on a bounce to 1880, 1870. So make sure you're shorting the bounces, guys. Don't buy this shit at the lows of the day. So VIX calls on the dip. It's supposed to say CL, not GL, guys. So we're interested in shorting oil puts. OSTK, guys, this stock is just another bubble right here. If it shoots to around 82 at any point intraday, just shorted at 82 by 80 strike puts. This is a money maker right here. RH, good earnings report. Everybody loves it, but this show is about to come to an end. Not necessarily abruptly, as we've seen on stocks like Lulu, because this one's actually getting a rather positive reaction, but on small volume. So 407 is the level. You see RH at 407, pull the Victoria, buy puts. Apple, it could revisit possibly 119, 120. If it does bounce there, guys, there's only one thing to do, and that is to buy puts. Not way out of the money. Don't be buying no like 110 strike puts. However, those could possibly make the money. But stick with 120, 115 puts on Apple. If it jumps to 120, pull the trigger without any hesitation. Samuel Adams beer, guys. You gotta love it. This beer maker. Pretty soon going to be selling for the price of Amazon. Or maybe this is the top right here. So interesting if Samuel Adams reaches a level of like 840, 850, maybe 845 to be precise. Buy some 840 strike puts. This stock is absolutely freaking insane, and while the rest of the stock sold off recently, this one didn't. So sometimes they do sell off with a delay effect. This could be a really good trade right there in Samuel Adams beer. So let's take a closer look at the chart of oil. What? Whoa. Hold on a second. Is this a chart of oil? Damn, remember, not so long ago in April, this thing was trading negative. Minus 40 negative, and now it's plus 40. Or this chart as of the close September 9th, guys, so it was 38 bucks. So expecting oil to make a move to about 30, maybe just dip under 30. Now, as you can see, while the market was pretty much rocketing higher, oil has not done anything. So oil prices has not bought into the story of the idea of this huge, fast recovery. And at this point, with businesses trying to open up, not working out as perfectly as everyone expects, it could decrease the demand for oil. And as you can see, the best conditions when oil was crashing, right? So this is not going to create any crash in the market. But if oil starts to sell off fast, like meaning like we're just at 40, if we could see oil at like 30 within 72 hours, I mean, this will definitely get a huge sell-off in the market. And there's a couple of reasons. Like clearly the jobless claims number, that's no reason. I mean, people are still freaking unemployed filing for jobless claims. How is that favorable for oil demand? It's not. So pay close attention to what oil is doing today. And if oil maybe sells off by tomorrow, this could be a very meaningful indication. And by sell off on oil, I don't mean like by tomorrow it could drop here. But what I'm saying is if oil could break below level of, let's say, 37, if you're trading it by close to the money strike puts, like 38, 37 strike puts, the ticker you want to trade on oil futures is /CL. Pull up the option chain on the futures and buy this 38, 37 strike. Don't buy anything below 37. So potentially if it drops to 35 tomorrow, I mean, this could be an easy 3, 4, 500% right there, depending on what exact entry you got. Volume on the sell side is increasing, and we got definite def cross on the MACD. So very many reasons to be bearish on oil. If you take a look at this level, it's highly significant because when the entire crash was happening in March, right? So oil makes a huge gap down. We devoted a huge video, like a 1 hour long video, explaining how oil, when it was trading here, it could drop all the way to 20, possibly lower. And so like literally 3 days later, it does this. It gaps down and it drops pretty much crazy. We didn't expect oil to go negative, okay, but we did expect oil to get slashed by at least 50% and certainly exceeded our expectations in that particular time frame. We're not expecting oil to go negative again, but a healthy move maybe to the low 30s or high 20s could be reasonable for oil over the course of the next 30 to 60 days, with the majority of the move could actually come in like literally in the near future here, 72 to 96 hours. So oil basically points to a move lower. Now that's generally not a favorable condition for the market. Depending on how sharp and fast that move is really going to dictate how the market is going to respond. Also, when we take a look at this weekly chart, having the same indication of formation of a def cross. Right now we've got a def hook, so def cross is coming on oil. Now, interestingly, that this is matched with the condition in the US dollar chart that creates a reverse head and shoulder. On the daily chart, dollar actually looks bullish. So as you know, the predominant understanding by market participants and the predominant view right now is that dollar is going to hell. It's going to crash. Well, I have some news for you guys. It already fucking did. Okay, so to expect dollar crashing further from here within a short amount of time would be highly unreasonable considering the chart. Expect a bounce. It does not mean that ultimately dollar will not break lower, but right now it's destined for a bounce. So typically when dollar bounces, you have two things. That's actually a catalyst for oil to sell off because it decreases demand for oil. So we've got multiple catalysts for decreased demand in oil. Stronger dollar is definitely one of them. So based on the chart, looks like dollar is destined to stage a bounce short term, guys. And if that's the case, then we can also presume that gold is going to sell off, even though pre-market gold in the last couple of days, guys, have been highly bearish on gold, but it's just refusing to make a move lower yet. It does not mean it's not going to come. So pay close attention because on gold futures, utilizing put options, you can make a ton of money, especially like on Fridays, you can buy them super cheap. And, you know, sometimes you can get a 20x type move. And with gold, you can do it in like a $50, $60 move lower. So could be a highly, highly interesting trade going into tomorrow. We have to be paying close attention to what oil does, what dollar does today. And just a quick reminder, right? These two white candles on dollar, they were taking place while the market was crashing, right? From 30,000 to 22,000 on the Dow, from 3,400 all the way down to 2250 on S&P 500. That's what dollar was doing. So basically, think of it as this, all right? If somebody's going to sell stocks, okay, what are they going to get in return? Well, they're going to get dollars. If somebody sells gold, I mean, what are they going to get in return? They're going to get dollars. all of a sudden, if somebody decides to sell everything because of the current situation going into election and everything, just a lot of people just going to go to cash. And so last time, a bunch of people went to cash positions at the same time. This is what dollar did, right? It went from 96, initially pulled lower, and then just skyrocketed basically from 94 level all the way to 104, almost touching 105. So very sharp, strong move higher in the dollar. Now understand this, that right here, we are not very far off this 94 mark. And so if dollar rallies above 94, we can get a sharp move maybe to 96, 98. A lot of shorts will be covered in positions, so we could see some similar action to what we've seen. Now, you know one thing, that was the only thing that was going higher. Gold was not going higher in March when the market was selling off. Nothing was going higher, but the only thing that was going higher was the dollar. So to me, considering that they always hold position in dollar, considering how much we are creating these very beautiful head and shoulder reverse head and shoulder pattern, guys, this bounce in the dollar could happen like momentarily starting today, tomorrow, Monday. And if that's the case, then the market is going to make a substantial move lower. So everything lines up, considering the fact that, pre-market, we're not getting any good data. We're not getting any really good, but the market is not reacting yet. Just wait till the second half of the day, because we could get a rather interesting move. And if we do end up with a move 6 today, guys, which is the highest probability, we could freaking get a crazy freaking move 3, which you can make a ton of money. So basically what I'm suggesting, if you've seen the market sells off by the end of the day between 2 and 4 p.m., just hold the positions overnight. Do not freaking get out. Keep them positions overnight, because we're destined for a gap up lower in the morning. So we've been playing around with majority of Thursdays after these jobless claims. We're getting a lot of these 11-11 with 6 behavior, 11. So predominantly some kind of 11 behavior. So at times we had a 6. And so considering the market is in different shift, different environment, VIX is higher than it's been basically at any given moment right here on any Thursday. So we are in a different environment. So with that puts us for a higher probability of a move 6 today. And if it's a 6, guys, tomorrow's going to be a 3. And this level of 29.41 of the VIX from yesterday is going to look like, oh my God, we're at 40 on the VIX now. Shit, why didn't I buy VIX when it was 29.41? And so the key criteria to measure whether you should keep the positions overnight is look at the VIX. If we're going into 345 and the VIX is above 30, you definitely want to keep your positions overnight, guys. All right, so complacency. Nobody thinks that, everybody thinks the crash is over, which is beautiful, because hopefully these options are going to depreciate a little bit on the put side so we can get them cheaply. And going into a move 3 formation with a gap down tomorrow, it could be a high payout day, guys. So September 9th, Wednesday, yesterday, guys, was a move 7 with a 6 behavior. Clearly, I mean, they buying the dip, but look, hold on, what happened to all the people that were buying the dip? All of a sudden, they're running for the hills. The most notable characteristic of a move 6, guys, as you probably already know, if you've studied the course thoroughly, that this sell-off happens on much greater volume in relation to the rest of the volume for the day. So that's exactly what we've got. So that is an indication that today could be a much more pronounced move 6, meaning the magnitude of the move could be much greater than this last part of the sell-off at the end of the day yesterday. So 3-7 is the sequence. 3-7. Considering that the magnitude of the move was 7, this huge sell-off at the end of the day with the 6 behavior, guys, didn't get us to close the prior gap. That is not really a very bullish 7 move. So 5-day sequence is 7-3-2-3-7. And, guys, I mean, it's a straight-up downtrend. I mean, we're bouncing, but guess what? That was yesterday. We bounced to this 34.20 once, 34.20 twice, and then we dropped. So if we touch that level, 34.20 today, it's an easy entry. Just short it, because we're not going to break above that. I mean, it's a solid downtrend from here, and it's basically bounce, drop, bounce, drop, bounce, drop. Bounce, this is where you short in the expectation of further drop. So the strategy is super simple, guys. Days like today, you should have no problem making any money. You just got to be patient. Things may not be moving crazily, because they're certainly not moving crazily per market. But when that wild 6 comes at the end of the day, you get paid. And it gives you a high probability of a move 3 tomorrow. So We're still expecting VIX to rocket higher, guys, despite of a first red day on the VIX. Expecting tomorrow, which would be at this point September 11th. Let me check here. Yeah, September 11th. We're expecting the market to gap down and continue selling off through the rest of the day. So you basically get in between 2 and 4 p.m. today, hold your positions till 2, 4 p.m. tomorrow, and collect the gains, guys. Let's rock. I'll catch you in the next video tomorrow. Take action around 2, 2:30 p.m. today.